Is the crypto market stuck? Just a few years ago, it seemed unstoppable. Bitcoin was soaring, millionaires were being made overnight, and everyone from Wall Street to small-time investors wanted a piece of the action. But fast forward to today, and things are looking different. Prices have been struggling, new investors are hesitating, and even die-hard crypto believers are starting to ask, what happened? Some say it's just a phase, that crypto is in a temporary slump before its next big breakout. Others believe something much bigger is at play: government crackdowns, industry scandals, and global economic shifts that could change the future of digital assets forever. Bitcoin just hit a 4-month low, shaking investor confidence. Meanwhile, regulatory battles are heating up, and even high-profile figures in the industry are facing serious legal trouble. Just look at Binance's founder, Changpeng Zhao, who recently pleaded guilty to federal charges, one of the biggest scandals the crypto world has ever seen. And if that wasn't enough, massive security breaches, like the WazirX hack, have drained millions from the market, making investors question if their money is truly safe. So, is this just a rough patch for crypto? Or are we witnessing the beginning of the end for the market as we know it? Let's break it all down. Crypto has always been a roller coaster, but lately, the drops seem steeper and the climbs much slower. Bitcoin, the king of digital currencies, recently fell to a 4-month low, dipping to $76,867 before clawing its way back to $80,480. And that's just one example. For investors, this kind of turbulence isn't just nerve-wracking, it's driving people away. See, back in the 2021 bull run, volatility was exciting. People jumped in hoping to double or triple their money overnight. But now, it's different. Instead of fueling hype, these price swings are making investors hesitant. The promise of easy profits has been replaced by fear. Fear that the next crash could be even worse. Big institutions, which once saw crypto as the future, are pulling back. Retail investors, regular people who drove past booms, are sitting on the sidelines. And without that flood of fresh money pouring in, the market is stagnating. Then there's sentiment. Crypto used to be filled with optimism. Talk of Bitcoin hitting $500K or even $1 million wasn't just wishful thinking, it felt inevitable. Now, the mood has shifted. Doubt is creeping in. Has the market simply matured, or is it running out of steam? But price swings are just one piece of the puzzle. There's something even bigger holding crypto back, and it's coming straight from the top. Government intervention. For years, crypto was like the Wild West. No rules, no restrictions, just endless possibilities. But governments have finally stepped in, and their crackdown is making investors nervous. One of the biggest moves? President Trump's announcement of a strategic Bitcoin reserve. Sounds bullish, right? After all, if a government is stockpiling Bitcoin, that should signal confidence in the market. But here's the catch. The US didn't actually buy any Bitcoin. The announcement felt more like a political play than real support, leaving investors wondering whether this was a step forward or just empty talk. And it's not just the US governments around the world are tightening their grip. China has doubled down on its crypto ban, India is considering even stricter regulations, and Europe is rolling out new compliance laws that make it harder for exchanges to operate freely. The message is clear. Crypto isn't the untouchable rebel it once was. But the biggest shock? Regulators are going after the giants. Binance, once the world's largest exchange, is under fire. Its founder, Changpeng Zhao, pleaded guilty to federal charges, stepping down as CEO in disgrace. FTX's collapse is still fresh in people's minds, and now another major platform is facing legal trouble. Investors are asking, if the biggest names in crypto aren't safe, what is? With regulations tightening and key players falling, confidence in crypto is shaken. But there's another factor killing the market's momentum: the rise of cybercrime. If there's one thing that scares investors more than market crashes, it's corruption. And lately, the crypto world has been drowning in scandals that make even the most die-hard believers question everything. Just look at Binance. Once the most powerful crypto exchange in the world, it's now caught in a legal storm. Its founder, Changpeng Zhao, pleaded guilty to federal charges, stepping down from his own company. He's facing serious consequences for violating anti-money laundering laws. The exact thing regulators have been warning about for years. This wasn't some small-time crypto scam. This was the biggest exchange on the planet, and it was playing fast and loose with the rules. If Binance wasn't safe, what does that mean for the rest of the market? And it's not just Binance. FTX's implosion in 2022 sent shockwaves through the industry. Billions of dollars vanished, leaving everyday investors holding worthless tokens. Sam Bankman-Fried, once seen as crypto's golden boy, is now behind bars. These scandals don't just hurt the people involved, they shake the very foundation of trust that crypto was built on. The result? Investors are getting cold feet. Big institutions don't want to risk getting caught up in legal trouble, and small investors are scared of losing their money to the next big collapse. And without trust, crypto can't grow. But if scandals weren't enough, there's another major threat draining billions from the market: hacks.
Do you want to learn how to get familiar with crypto? You've heard about them before, but you've never considered having a real approach to them. Give me 30 seconds to convince you. Deposit $100 and get up to 50 USD in rewards. Verify your account, deposit, and start trading to maximize your bonuses. Are you still insecure? At Bybit, the more you deposit, the more you earn. With your first deposit and trade of just $500, you can get an instant $50 bonus. And if after all this I still haven't convinced you, I suggest you try the app. Because Bybit is not just an application, but a reality.
If scandals and regulations weren't enough, crypto investors have another massive problem: hacks. And these aren't just small-time cyber attacks. We're talking about hundreds of millions of dollars vanishing in the blink of an eye. Take the Wazir X hack, for example. Hackers, reportedly from North Korea's Lazarus Group, stole $234.9 million, one of the biggest crypto heists of the year. And the worst part? This wasn't some isolated incident. Crypto exchanges, wallets, and DeFi platforms are under constant attack, with billions lost in the past few years alone. Here's the problem. Crypto was supposed to be secure. Blockchain technology was designed to prevent fraud and unauthorized transactions. But that doesn't stop hackers from exploiting weaknesses in exchanges and smart contracts. And with every new breach, trust in the system fades a little more. Even major players like Binance and Coinbase have been forced to tighten their security, but investors aren't convinced. Many are starting to ask, is crypto really as safe as we thought? And if not, is it worth the risk? The ripple effect is clear. When money isn't safe, investors hesitate. And when investors hesitate, the market stagnates. With hacks growing more sophisticated, many fear the worst is yet to come. But cybercrime isn't the only factor making people rethink crypto. There's also the global economy. Even if the crypto market were free from scandals, hacks, and regulations, there's still one massive obstacle it can't escape: the global economy. Crypto was once seen as a hedge against inflation, a way to escape traditional financial systems. But now, it's moving more like a risky tech stock than a digital alternative to gold. Why? Because in times of economic uncertainty, investors don't want risk. They want stability. Take interest rates. Over the past year, the US Federal Reserve and other central banks have been aggressively raising rates to fight inflation. When rates are low, borrowing is cheap, and speculative investments, like crypto, thrive. But now that rates are high, investors are pulling money out of volatile assets and putting it into safer bets like bonds and traditional stocks. At the same time, economic fears are growing. Talks of a possible recession, rising unemployment in some sectors, and global conflicts have made people more cautious. When people are struggling to pay their bills, they're not dumping money into Bitcoin. And let's not forget government-backed digital currencies like China's digital yuan. If more countries start pushing state-controlled alternatives, will crypto even have a place in the future? With economic pressure mounting, the question isn't just whether crypto can grow, it's whether it can survive. But there's still one last piece of the puzzle that could decide crypto's fate: public perception. Crypto isn't just about numbers on a screen, it's driven by belief. When people believe in its future, they invest. Prices rise and the market grows. But when doubt creeps in, everything starts to fall apart. And right now, confidence is at an all-time low. One reason? The media. Just a few years ago, headlines were filled with stories of Bitcoin millionaires, groundbreaking innovations, and predictions of a $1 million BTC price. Now, the news is dominated by scandals, lawsuits, and security breaches. Every time an exchange collapses or a hack drains millions, it fuels the idea that crypto is nothing more than a high-stakes gamble. Then there's the shift in social media. During the 2021 bull run, influencers and celebrities were all in on crypto. Elon Musk's tweets could send prices soaring overnight. Now, many of those same voices are either silent or outright skeptical. The hype cycle has faded, replaced by caution and uncertainty. Even retail investors, the same people who helped push Bitcoin and altcoins to record highs, are hesitating. Scammed by pump-and-dump schemes, burned by market crashes, or simply disillusioned, many have left crypto behind. Without fresh excitement or new narratives to bring people in, crypto is struggling to regain its momentum. So, is this the beginning of the end, or is crypto just waiting for its next big spark? Let's take a look at what's next. So, is crypto dying? Not exactly, but it's definitely at a crossroads. The hype that once sent prices soaring has faded, replaced by skepticism, scandals, and uncertainty. Regulations are tightening, major exchanges are crumbling, hacks are draining millions, and even the economy is working against crypto's growth. But here's the thing. Crypto has been declared dead countless times before. After the 2017 bull run, Bitcoin crashed by over 80%, and everyone thought it was over. Then it came back stronger than ever. So, could history repeat itself? Absolutely. For crypto to thrive again, it needs something big to reignite confidence. A major technological breakthrough, a massive adoption push from global businesses, or even a shift in regulations that makes investing safer. Until then, the market is stuck in limbo, waiting for its next catalyst. So what do you think? Is this just another cycle in crypto's unpredictable journey? Or are we witnessing the slow decline of digital assets? Drop your thoughts in the comments below, and if you found this video interesting, don't forget to like and subscribe for more deep dives into the financial world.
If you haven't already done so, visit our website. You will find the link in the description.